Hi, everyone. Welcome to the 135th episode of the Timing Research Show for April 24th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be talking about the 187th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com and you can download this or any of the past reports there. I have Dave Landry back to host today, so I'm going to go ahead and turn it over to him.
Thank you, David, and thank you, Timing Research, for having me back once again. We've got a full lineup today. Let's start with you, Glenn. Tell us a little bit about yourself. For those of us who don't know you, I know you're a veteran of the show. And, in fact, we got all veterans this week. Tell us a little bit about PacificTradingAcademy.com.
Thanks again for having me, David. And well, it's always a treat to be with you guys. But I've been trading and teaching with Pacific Trading Academy since the inception, which I guess is more than 14 years. I've lost track, but I've actually been trading almost, well, 30 years or so if I go back to the beginning. But primarily have a technical approach, looking at trend, market timing, and Elliott structure. That I guess the three pillars of what constitutes the analysis that I do. And in the course of the last 14 years, again, in my teaching, I have worked with beginning traders, intermediate traders who've been, involved for a long period of time, primarily technical analysis. And so that's kind of the quick snippet or synopsis of what I do.
Okay, cool.
Yeah, great.
All right, Kurt, let's go to you next. Tell us a little bit about yourself and tell us a little bit about T3Live.com.
Thanks for having me. As always, appreciate the opportunity to be here and hear what everybody else has to say. So yeah, with T3 Live, I focus primarily on Forex. That said, I do look at equities, ETFs, etc. And one of the things we'll talk about here throughout the show, I'm sure, is just the approach, which is technical analysis based, and how if you use the right methodology, whatever you use can be applied to anything. You don't have to learn different strategies or styles depending on what it is you're trading, and even what time frame you're trading. So having said that, I trade Forex, but we have other guys here that do equities specifically, options. So, little bit of something for everybody.
Cool. Yeah, I agree with you. Markets are markets. Christian, let's go to you next. Christian Fromhertz from TribecaTradeGroup.com, another veteran of the show. Tell us a little bit about yourself and tell us a little bit about TribecaTradeGroup.com.
Sure, and also thanks for having me as well. I love being here for these presentations, and it's really great to hear everybody's opinions and thoughts on the market, and also great pronunciation on the last name. First time you hit it, so so thank you for that. So yeah, my trading background, I started over 15 years ago. I was with Merrill Lynch, which of course got bought by Bank of America, but I was a senior trader at Merrill Lynch, both on the Delta One trading side as well as the ETF trading side. I was a director over there. And then just about a year ago, I left and started, wanted to do trading just fully on my own. So I started Tribeca Trade Group, where, what I wanted to do, my vision was to kind of bring the institutional trading desk, something that I love, over to the retail side. And at Tribeca Trade Group, we have an all-day chat room, all-day live trading room, and we concentrate mostly on equity trading as well as option trading. I look both at stocks and ETFs. My bread and butter is ETFs and a macro trading style, but I like to do kind of a top-down approach into kind of what's moving the market, and then I get more granular and look for trends. So the philosophy that we use is trend trading, watching the tape for ideas, so technical analysis, so looking for trades that agree with our trading system, and then looking for a smart setup, so using option activity along with the charts and technical analysis, and then putting that into trend trading and really looking at where you want to get into a position as well as where the trade doesn't work, where you want to get out to. So it's a little bit about us. Thank you.
Cool. My name is Dave Landry. For those of you who don't know me, from DaveLandry.com. I've been at this 20-something years. I actually stopped counting once I hit 20. I started off more on the institutional side, and then got a little bit into the educational business, and that's mostly what I do now. I have worked with several hedge funds over the years and thousands of individuals I trade mostly stocks, but as I think Christian mentioned earlier, technical analysis. So I will trade other markets too, but my main focus is stocks because they're a little bit more inefficient. In fact, if you dig hard enough and long enough, you can find some incredible inefficiencies that are a little bit tougher to find in markets like Forex. I believe you can only predict the short term when it comes to the markets. I'm actually slotted as a swing trader. I've read a couple of books with swing trading in the title, and that's probably where I got that label. But I'll actually stay with a position as long as it moves, and that's where the trend following comes in, the longer-term trend following. Longer-term trading, I think, is way too risky. We read about these famous traders that make all this money, but kind of the rest of the story is, if you do a little Googling, you'll see that many of them have blown up or certainly disappeared. But that's where the money is, but it's also the risk. So I think if you can get in for a short-term trade and hang around for the longer-term trade, you'll do fine. And I have a hybrid approach to money and position management. I have some free reports on my website that outline all of this, and I also do a weekly webcast, which I'll mention again towards the end of the show, where I explain this in a lot more detail. Glenn, let's go back to you. What direction do you think the S&P is going to head from, I guess, this morning's open, which we already know, to Friday's close? And while you're at it, go ahead and tell us, rate your confidence to that answer by estimating the probability that you have correctly predicted this week's market's move.
As we speak, I'm gonna go with a long projection between now and the end of the week. Curious, I thought about this question. Had you posed it to me about 24 hours ago, I would have said the very opposite. But what a difference a day can make. Looking at a gap up today in the S&P, it's a sign of strength is my immediate takeaway, and I expect that to persist through the end of the week. Let me put that into a little context, if I might, Dave. I have a time point coming in next for which I have confidence at least 80%. I expect it will be 80% reliable for May 3rd, which is next Wednesday, a week from this Wednesday. And so that is the reason why I have about 70% confidence we'll see a higher close relative to the current price in the S&P by the end of this week. I expect overall the trajectory between now and that and next Wednesday is higher. And so Friday coming in kind of like 2/3 into that, I expect a higher closing price. After that, after next Wednesday, completely different scenario. But between now and Friday, I expect a higher close. Higher price level. And to be a little more specific on that, I can conceive of, well, let's see, 2375 is the next projected zone of overhead resistance that I think could be significant. We're trading about 5 points below that as of a few minutes ago. A higher zone of resistance is pretty obvious. It's the all-time high in the S&P, 2397 and change and a quarter. That's curious because I've got some proprietary technical trend line type stuff that indicates 2397 to be a perfect balance point in price with respect to time. So 2397 thereabouts is equivalent more or less to my May 3rd time point of next Wednesday. Again, that's a little just details as to why, but I would say, again, not seeing the price action so far that we've had today, I would have said down. But because of today, the gap, even though structurally, where I think right now we're at the low end of the range, I think it's more likely we'll see some follow through given everything I'm aware of the events of this week is the fundamental points that we might get into in a minute as potential drivers. But I'm going to go with higher by Friday. I'll give it about a 70% confidence.
Cool. Just a couple of announcements here for you guys. I call it a new feature, but it's been around for a while. If you want to add in a trade of the week towards the end, I'll ask you guys for that. So if there's something you want to think about now, if you don't have a trade, if you have like a little want to throw out, that would be awesome too. And also in the next question, there's when I ask about developing events, if you want to share your screen, everybody seems to enjoy that. So feel free to share your screen. Kurt, we're going to go to you next. What direction you think the S&P is headed, and then rate your confidence. Same question to you.
All right, so you should be able to see my screen. I've got that up, and it's the S&P right now. So obviously, French election results come out, we get the gap up here, and it's broken out of this pennant type formation where the volatility was just getting squeezed, as I'm sure everybody knows and felt for that matter. So we gap up above this area, but more importantly than just breaking above this wedge is the fact that it got over this resistance level, or what was resistance, and it's sitting kind of right on top of it here now. So I think it's going to be important to hold that. I mean, we could pull back a little bit, but I think it's going to be real important to hold that for a move higher. So as of today, my confidence level that we do move higher is 100%, but it's really dependent on holding in, call it the 235.50 level. I think if we lose that and start to fall back below some moving averages, it could really start to unravel quickly at that point.
Okay, cool. All right, Christian, same question to you.
Yeah, sure. Let me see if I can get the screen share.
Well, you could just, if you want, you can answer the question.
Yeah, sure.
And then come back.
Yeah, I'm jumping ahead to the next questions, but yeah, I'll say long. I'll say up would be the direction for this week for me, with a whopping 60% confidence. And I'll get into the reasons first, but just looking at the small caps right now and looking at NASDAQ, very strong. Besides the S&P.
Just let me know.
Okay. Okay. Sorry about that. I had a brief interruption there. So let me get your. So you said higher. I'm sorry.
Yeah, higher, and not too much of a heavy confidence just for this week alone. I'll talk about my reasons on the next question, but
okay. Right
now it's 60% conviction. A little bit further out, I'm more confident, but I'll get into that into the next question.
Okay, cool. I'm going to go ahead and go with up also. In fact, I'll go ahead and answer the next part of the question at the same time too. So I'm going to get the screen shared here. And if you, Dave Cosmeter, if you could, they're drilling in the background. Let me know if that bothers you or picks up. I think it's going to pick up. Oh, Jesus.
Yeah, I can hear it just a little bit.
You can hear it just a little bit? Okay.
Not that
It's
bad.
pretty bad over here. They should be done in just a second. Anyway, as far as, let me go just answer the first part of the question, and then I'll get back to the remainder of it. As far as the up or down, I think the S&P is going to continue to head higher. As a trend follower, I'm just following along with the longer-term uptrend, and I'm going to talk about that in the next, when we get to the charts in the next section. I'm going to give myself a confidence of about 75%. I often say that you could only predict the short term when it comes to markets. That doesn't mean that you could always predict the markets. And ideally, I want some sort of setup, usually a pullback for established trends, for me to make a market prediction. I'm looking for a bounce from an oversold condition in the direction of the trend. Now, with that said, for now, I'm going to err on the side of longer-term trend. And when I come back around to the charts, I'll explain that detail. Glenn, let's go to you.
Sure. I'd forgotten to share my screen the last time, so maybe I'll have an opportunity.
No, well, normally we share it this time around anyway, but that's okay.
Yeah,
I don't mind. Sometimes
Sure.
It makes it easier just to combine it. Basically, for your answer to that question, please share with specific reasons you think the S&P is headed higher.
All right, let's see if I can. Hold on, let me try and enact this. Okay, I'm going to pull up. All right, can we see the? I have a daily S&P chart on the screen. Are we able to see that?
Yeah, let's.
You can or cannot? Can we see that, gentlemen?
Yes, I can see it.
Great. Yeah, one of the I mentioned 2 points. The vertical line right here corresponds to my time point of next Wednesday, May 3rd. And this trend line from this bottom here off of this top is what I was alluding to in the previous question, or in my attempt to kind of give a reason as to expecting higher prices by the end of the week. Here's the all-time high on March 1st at a price high of 23.97 1/4. If you look at, if I were to average the velocity of appreciation given today's price action so far with that gap up, I could clearly see the nexus between, or the coming together or balancing between the price and time, and it happens to correspond to that all-time high, which makes sense. It was a resistance point historically and could serve as such more or less by my projected time target. Here's the current structure. That's kind of a shooting star type structure from a candle perspective, which is by itself kind of price depressing, but I expect overall the gap will, the energy that came into the market, given whatever drivers are out there and events are in the world. I guess the market's experiencing the follow through from the election, the initial round of election in France over the weekend. And I expect that more or less to follow through. Again, here's your key. This is a key level of support down here at 23 area. If we break through that, then this bottom here at 23.17, a little lower zone. Again, the preponderance of evidence suggests we're going to see higher prices into next Wednesday, and Friday is in the mid, and we achieve Friday before we do next Wednesday, and as such, I think the majority of events will augur for higher prices. One final point, from a pure trend strength aspect, one of the ways I measure the or acquire an initial sense of directionality of trend is to follow, or is to measure the magnitude of retracements to what I consider to be a primary trend. In other words, if you look at this is from this top, the all-time high, March 1st down to this bottom, measure how deep is the pullback up to March 16th. It's rather deep. So all things being equal, I would take that to me an indication the market really, even though it followed through with further declines, really wants to go back up. Again, from this top down here, pretty deep retracement. From this top here down here, very deep. That's almost 100% retracement. So currently, if you look at all the price action from the all-time high and beginning of March 1st through where we are, I'm seeing overall structure that suggests the market still, there's more life left in the bull. Now, I'm surmising that picture might change as we get to the middle of next week. But as for the current status, overall, even though the price trend overall from the all-time high to where we are right now is lower, albeit slightly given today's trade, if you measure the magnitude of retracements against each of the pullbacks, they're relatively large or deep. And as such, that's an indication to me from a pure kind of granular level, as one of the other persons mentioned, that the market still wants to go higher right now. If we saw more shallow pullbacks off of the tops, that would be an indication that there is a transitioning more likely from a bull to a bear. I don't see that. I'm still seeing deep, relatively deeper pullbacks off of the tops, which is a sign the market still really has life left in that bull. And again, so, depending on how the market responds, whether I'm right or wrong on this time point, as we get to this top, which I expect it will. If it easily breaks through, probably off to the races. If it is repelled, as you might expect, that's a different situation. So that's my technical reasons as to why I expect higher prices by the end of the week. So the major events news-wise that I'm aware of, the aftermath of the election in Europe and France, I understand we got some GDP data coming out this week, and then the other big event, Trump's tax reform stuff this week, and then I know on Thursday we've got some important earnings data coming out. But I always start from the technicals in the chart, because who knows, it's big question marks out there by all of the aforementioned fundamental stuff. What I do know with greater certainty is I can allow the market to be its own best arbiter. Structurally, overall, the preponderance in balance is bullish to me. Okay,
I'm going to stay muted, but Kurt, let's go over to you. Same question from your question, where you answered to question 1. Please share what specific reasons you think the S&P is headed higher.
All right. So yeah, I mean, as was just mentioned, we've got the earnings. You got Amazon, Google, Microsoft. So those are some big names that are going to be coming out with earnings. You have the French election results, which I think at this point are over with in terms of the real impact. And I am reluctant to use the word fallout because that's the last thing we got from it. But I think that's kind of done with. We have the tax plan that's supposed to be getting put on the table here this week, so we'll see if that happens. But at the end of the day, my comments about moving higher really aren't based on any of that. It's really just based on the technicals. And in my opinion, most trends move in the direction they're moving, right? The path of least resistance, barring any unforeseen, shocking type of black swan event news. You know, everything that comes out following the trend is just in support of it. So that's kind of my take on news in general. Now, you have to be aware of it, especially if you're an intraday trader, right? The volatility that can come in, say, crude inventories coming out, or if it's an earnings report, you have to, as an intraday trader, know. But from a longer term approach, swing to investor, these things really don't have significant impacts on the long term trend overall. So I just want to put that out there, that I don't really base my decisions on what I think may or may not happen in the coming week based on news or lack of.
Yeah, amen. I totally ignore all news, and as soon as I say that, I'll even say read my lips, and then I'll get an email. Well, the earnings are coming out. What should I do? I'm like, well, just follow the trend, because if you do it right, you're going to be in for a long, long time, and there'll be many earning periods and all. But I hear you. Yeah, a lot of times, if you're just trying to day trade at something, you get blindsided by some event if you're not paying attention. But amen to that as far as news being noise. Christian, let's go to you. Same question. Please share what specific reasons you think the S&P is headed higher.
Okay, gotcha. And so I look at a lot of factors, just as some of the other gentlemen had said. I do think we go higher. One of the things that I monitor on a day-to-day basis, and a week-to-week basis, and a month-to-month basis is the how much money is coming into the market, and I monitor this with ETF flows. That's really one of the things that's been fueling the market since going all the way back to the election. Is just a huge amount of money has been pouring into equity ETFs. So you can see on my screen up here, this Bloomberg screen will actually tell you, which I have a spreadsheet that breaks all this down as well. Basically, there's been $98 billion that have gone into equity ETFs year to date. What essentially has happened since the beginning of the month, and actually, if you really want to get precise, right around March option expiration, is there's been no money that's been coming into the market, especially into domestic or US ETFs. So $98 billion has come into equity ETFs year to date. But if you break it down by month, it's been exactly flat since the last week of March. So a lot of money has been on the sidelines, and it kind of, if you take a step back and think about it intuitively, why is the money on the sidelines? Well, anytime there's events, the market gets very skittish. People don't want to redeploy assets. So of course, with the French election, these things just end up being a pause in the trend, which I think is what we're seeing now, is just a snapback rally. And then also, I would have said, even regardless of the French election or what's happening later in the week, which is the possible government shutdown, but just earnings alone, you basically just have to look at a chart of the S&P and look at last January, and you could see that the market's become very choppy right around earnings season. So just looking at January, when we started last earnings season, we were basically flat all month long, and then towards the end of the earnings season, we start to move higher. Once kind of the cat is out of the bag and everybody's okay with the earnings results, markets seem to accelerate towards the end of that. So my whole thought process: we put out a weekend newsletter, and I've seen this before. Every big earnings quarter, we want to get through at least a third of earnings season, which this week we have 37% of the S&P reporting this week. As already mentioned, Microsoft, Google, Amazon, some of the heavy hitters are reporting this week. So that, I think, is really the reason you go why there hasn't been any buying or any money being added into equity ETFs, or specifically US ETFs, since the beginning of the month. It's because of all these events. So I think investors are waiting, plus the valuations in the US are higher. So people really want to wait and see that these earnings are going to support the current price levels. So I think, number one, we just need to get through this week. And as long as there aren't some major bombs in earnings, I think we're going to continue to carry on with the trend. I think everything was just a momentary lapse in terms of us going sideways. So, you look at the S&P chart. I can look at this in terms of value areas, which we also look at. You can see on my screen in the S&P. So really the next breakout level is going to be 2381 in S&P futures. But we basically held here. We had a little bit of volatility. So, I don't really want to make any major predictions. I like long until the trend tells us otherwise. So looking at the 50-day moving average, we kind of broke a little bit here. We had a couple days below the 50-day moving average, but we reclaimed it. So, if you want to set your stop a little bit below the 50-day moving average, I think that's really the way to go for the S&P. The other markets, the other things that I'm showing, are good signs. Again, I'm always looking for anything that kind of backs up my reasoning. So I always look at small caps, because I believe once small caps are a great barometer of risk on, and once you start to see small caps outperform as they did last week, rather than what they did in the last few weeks, I have more of a green light into thinking that the market goes further up or further higher. So, and then the same thing with Nasdaq. You look at Nasdaq, and you look at that chart, and you say, what weakness? Breaking out to a 52-week high. And even when the S&P dipped below the 50-day moving average, the Nasdaq showed really no signs other than a little bit of a dip, which we need to do from time to time. So, 52-week high, it doesn't get much better for Nasdaq. So that's some of my thinking, and I think all that money that's been sitting neutral, or that's been sitting on the sidelines, will start to be getting redeployed, especially now that we have the first leg of the French election behind us.
Gotcha. Good analysis there. I'm going to dovetail in on a little bit of that, or some of that at least. Obviously, we've been stuck in this range for quite a while, but my feeling is, as a trend follower to err on the side of the longer-term trend. So obviously, a longer-term trend remains up, and as was just said, we did have the sideways movement, obviously, in January, and a lot of people got excited about that. But notice that we did always happen, but as a general statement, you want to err on the side of longer-term trend. And right now, if we measure to today's where we are today, if we close somewhere around this area here, we're less than 1% away from all-time highs. So again, err on the side of the longer-term trend. A trend's job is to try to shake as many people out this choppy sideways range. I think a lot of people have ended up chasing their own tail, and I think that's what we're talking about before the show and live. So I wanted to mention that. So everybody could get the benefit of that. And you have to be really careful not to try to make something happen when the market's going sideways. Honor your stops on existing positions and be selective. But as we continue to break out, to establish new positions. I'm more of a pullback player, so if we get a solid breakout followed by a pullback, we should find plenty of setups. And I'll show you an example of a pullback that's set up right now in a few minutes. The Russell 2000, I'm glad you brought that up. Nice day there. Good to see it coming back nicely. It's been stuck in the sideways range absolutely forever. Longer term, still in an uptrend, but just killing us with the sideways movement. But now beginning to break out, and let's take a measurement on that. We're within 1% also of all-time highs, so that's certainly a good thing. One more thing, just to dovetail back off of you. I'm not a huge fan of the 50-day moving average. Market begins to sell off a little bit or go sideways. I think it's very relevant. And just to throw out something here that's kind of interesting, if you pay attention to what has been dubbed daylight, I wrote an article like in 1996, I believe, or 1995, where I talked about a breakout system, and one of the persons at Reddit called that daylight, because you could see daylight between the lows of the price and the moving average. And notice that we've had daylight for almost this entire leg, going all the way back to November. We had a little bit of downside daylight, but not much, and the slope of the 50 stayed positive. So that's certainly a good thing. Now, indicators don't indicate anything. They help to illustrate what's already there. And so far, so good. Positive slope, and now we're back to having upside daylight. But I always plot a blank chart first. Let me just pull the NASDAQ up real quick. Continue on. NASDAQ, obviously, big day today, popping out to all-time high. So that's certainly a good thing, getting out of this range nicely. Now that we have the market out of the range, what you want to watch is to see if the market comes back into the range. Then we're back into the soup. As a hedge fund manager, I used to work with used to call it. But so far, so good, obviously, but it's just a few hours above it. But as long as we stay above this range, I think the market is gonna be just fine as far as the NASDAQ is concerned. And I would like to see, obviously, the S&P and the Russell. I do like the fact, one last point here, I do like the fact that we had some time to digest the gains back in October, November. I knew it was not going to be sustainable because markets don't go straight out. What's the old adage? Trees don't grow to the sky. But if they have time for people to adjust to a new level, remember, everything we're doing here is, at least from a technical analysis standpoint, at least the way I see it, is we're reading the psychology of the market. And when the market adjusts to a new level and everybody gets used to that price range, it becomes a bit of a value zone. And now we have a little bit of a pop, obviously, out of that. So far, back to you for the next question, the question of the week. And that question is, let me read it directly and make sure I read it right. But it's a good question. It's something that I actually covered in my last webinar. So I'm glad that the question is, what do you think is best? Trading one methodology all the time or trading multiple methodologies to adapt to the markets?
Dave, was that for me, or I think I lost you?
I'm going to reread the question, or
who is it for me?
It's for you, Glenn. Yes.
Oh, sure. Okay. Depending on, I think there's a semantic issue. What do we mean by methodology? I'm a big, I would espouse you looking at different relationships. And again, and this would apply across the board, whether you're a fundamental, technical, quantitative, all of the above, etc. I think your key, the key critical way to acquire as much edge and advantage, which is what all of this is really all about, and then combining that with some good money management, is not depending on a single relationship, because any one thing is going to work X% of the time, given whatever application. But I'm not aware, at least, of any one model or technique or whatever that works, is perfect. If it were, you know, the irony there is that ultimately perfect information tends historically to get disseminated and known, and that would slowly ruin the integrity of the structure we see. So that said, the next best thing I know procedurally to apply in terms of the analysis is look to utilize and create your strategy. It doesn't have to be a lot, but a few, 3 or 4 different relationships you can exploit, which when you coalesce is going to constitute your model. So for me, again, I look at first and foremost, like you, Dave, trend. I'm looking for the pure trend. And based on inertia, path of least resistance, a system, any system in this universe, and certainly stocks, bonds, commodities, you name it, whatever instrument you're trading is going to follow that. That's first and foremost. Unless
and you know, as I often point out, everything works better with trend. I've seen some very complex methodologies, but the trend's behind them, and when the trend's behind them, they work really well. And then, you know, when the trend goes away, not so much. Keep going.
Right. And then, so that's one relationship I look at. What's the current trend through the present moment, given whatever look back? If I'm a position trader or a longer term investor, I look back a proportionally greater amount of time historically. If I'm a day trader, my look back might be the last hour. That's my long term view, but that's more or less just proportional to whatever your average time frame is or window that you like to spend. Okay. Then what I would do, because I'm a big believer, it doesn't really matter one iota or what you look at, whether you look at oscillators, whether you look at candle formations, Ichimoku, you know, there's a million things out there. But for me, it's trend. I think that's a relevant component to study. But now but at some point, as you said, trend's going to change. You know, bull markets trees don't keep growing forever. So at what point, so I want to juxtapose or combine that with something completely different. So for me, I personally take this to the extreme. I believe a market's going to do what it's going to do when its time has come. So, you know, back when I was in my 20s, a guy at Merrill, I started at Merrill also as a securities broker, and a guy in our research department gave me a book on cycles. It made sense. He said everything in markets ultimately is to some extent a function of human activity. Human activity is a consequence of the earth revolving on its axis. So that had me from the time I was 25 years old. So I combine that with time. And then I look at maybe one or two other things that are completely different. Different things are not all that likely to all that frequently get into alignment. When they do is when I figure out, you know, what's the odds of one thing being wrong or two. but it is what it is. But the odds of 3 or 4 very different relationships all being wrong about the same market at the same time are correspondingly lower. I figure I've got a better take on what's going on in the market at that point. So one other, Dave, if I might, because I forgot to mention, and again, it's kind of an intermarket fundamental, but it is one point I am looking out to, because I sometimes go too extreme in the opposite to the technical. But information is information. On the level of fundamentals, there's always going to be an event or a series of events that serves to bring about what the charts are showing us, and that is, and I think that piggybacking on what Christian was saying on money flows into ETFs, ultimately you can drill back deeper to the Fed. So I do look at the Fed. I don't expect that they're going to raise rates in May. I think possibly at the June meeting, because they've indicated that they're going to, we've already had 3 increases this year, 2017. I think we might see the second one in June. So that's still in a perspective way of thinking of it, that's still ways out between now. Here we are still at the end, just at the end of April. So what are we, like, at least 6 weeks away from I expect where we would have another increase in rates, and I think will serve as a driver for further bidding. Fundamentally, the price of equities higher. So,
yeah, it's kind of interesting. You alluded to that the news always seems to come in to fit the trend. Kurt,
always, yeah, clearly.
Yes, it's fascinating. Kurt, let's go to you. What do you think is best? Trading one methodology all the time, or trading multiple methodologies to adapt to the markets?
I think one method is best, but that's really based on the methodology that I have. So, like, for example, I don't look for just one pattern. I have several patterns with different what we call amplifiers that put the odds greater into my favor. So, I think, as Glenn, I think, said, it's about having different tools that you use under one umbrella, so to speak, right? So I have different setups that I will look to enter based on, but it all starts from the trend, multiple time frames, market internals to a certain degree, and putting all of those pieces together, and then figuring out which strategy or which way of entering is going to be best suited to that environment. But I think where the bigger issue is, especially in this market environment, and this is something that I've spoken to traders about in our trading room recently as well, is the way in which you approach your management of the positions, right? Because if you're trending, right, you buy and hold, right? Or if it's moving down, you short it, you hold it, and relatively speaking, it's easy to manage that trend. When things are sideways, though, you can't expect the same type of outcome, right? If you're trying to buy and hold for a trend where there's no trend, you're going to be shooting yourself in the foot. You're going to get frustrated, and then you're going to start questioning, is this the right method for me? You're going to start looking at other things, and in my opinion, you start combining too much and you get confused. Where do you stop at that point?
Amen.
And it just starts to, you become a chart artist, as they call it, rather than really understanding what you're seeing and how to act based on that. So to me, it really comes more down to the execution and management that you really have to button down and be disciplined with.
Amen. Christian, let's go to you. Same question.
Yeah, sure. And just to echo what these guys have said, I think it's one methodology for me, but it's a lot of factors and really keeping it simple. I think one of the things that I've been listening to is everybody on this panel has a lot of experience, and going from when I started trading and using a couple different indicators, and then at one point using a ton of indicators, and you realize like you're making it more complicated than it needs to be, and sometimes you cancel yourself out of trades. So that I think that's what we bring to the table with a lot of our experiences. We've tried a lot of things. I probably
and there's always going to be a reason to exit a trade, and rarely a reason to stay unless you're following, for the most part, one thing. Because if you have all those indicators, you're always going to have a sell signal on your screen. I'm sorry, I didn't mean to cut you off. Keep going.
No, it's okay. That's great. So it really, I don't think it matters in particular, what indicator you use. It's whatever works well for you. Because I hear this over and over, like, where people try to sell indicators and so forth. It's, hey, if it works for you and if you make money doing it, then that's the best thing. For me, it's just following price, keeping it simple, looking at support areas. I look at value areas. I respect a lot of where buyers and sellers have met up previously. I think that's really important. So I've got value areas that kind of tell me whether we're in a choppy market or whether we're going to break out. Really good for giving me support and resistance levels. But I take a step back and look at those moving averages. I think the moving averages are really good to get into positions, and then also to use your stop. So if something just breaks above the 200-day moving average, it's really your system that you want to concentrate on. And before you get into any position, you want to know, where your exit is going to be and have that defined. And that's I think really one of the things that some of the novice or beginner traders don't look at. They're looking, hey, they want to get into the market, they want to join the party, but they're not really looking at risk and where they need to get out of a trade when it doesn't work.
Yeah, absolutely. I have so much to say on this. I'm going to have to try to curtail myself, but years ago, I took an excerpt from the movie City Slickers and I voiced over it, and I put it up on YouTube. And then I realized I'd probably get sued if I ever got caught doing that, or it was kind of, I wasn't trying to make money off of it. I just thought it was silly. But there's a line in the movie where the Curly character, who's the rancher or whatever that takes all the City Slickers on their little adventure, and he talks about how they all can't figure out life, and he says, you want to know the secret of life, and he holds up a finger and says one thing. I really believe that's a secret to the markets, and you guys kind of echoed that for the most part today from what I'm hearing. Find one thing that makes sense to you that's conceptually correct and follow it. And early in my career, I was very friendly with a trader, and it seemed like whenever the market was having a sharp reversal, all of a sudden he was a reversal trader. And then when the market was breaking out, it was a breakout trader. But if that breakout didn't follow through, he was back to being a reversal trader. And the list of his trading goes on. And in perfect hindsight now, I could see where he was just full of it. And there's no way you could be all things at all the time in all markets. And as I gained more and more experience, I realized if you did try to do that, you would be chasing your tail. And for instance, like right now, the S&P is going sideways for a while, so you think, it's definitely going sideways, so let me just become a choppy market trader or whatever. Well, what happens? You come in a day like today, and you get wiped out, or at least wiped out for a few months worth of trades. So what I prefer to do is just be a trend follower so you don't end up chasing your own tail. And when the market goes sideways like this, you just have a stop in place. And I often do what I call a dead money report. We'll get into stocks sometimes, and they'll go sideways for 2 or 3 weeks, sometimes even a month or two. And then they'll take off again. But most of my clients, they'll get impatient and they can't wait, and they'll hop out long before the market actually takes off. And I read just last week, and this was part of the webinar too, is don't give me what he said, don't give me timing, give me time. So I think he's alluding to the fact that if you just stick with a longer term trend, you'll do just fine and not end up chasing your tail. So patience is really key when it comes to trading. And when the market goes sideways like it has, you just have to be patient and not get sucked into some sort of day trading, provided that you're not a day trader. If you're a position trader like me, then you don't want to go in and make some day trades just because the market's chopping back and forth. But be patient and stick to it. Just real quick, just to kind of wrap up this answer, when you look at some of the answers to these questions, one guy saying you have to adapt to the market changes and all, I think that's just such a bad, maybe longer term you might adapt. Like I'll use a little bit more liberal entry and maybe a little bit more liberal stop to try to catch trends, because markets over the past 10 years or so are a little bit more choppier than they used to be. So you can make a gradual change, but I think if you try, again, not to beat the dead horse and use too many analogies, but I think if you try to, or metaphors, but if you try to adapt yourself to every little zig and zag, I can almost guarantee you're going to be perpetually out of phase and end up chasing your own tail. Okay, that's a long-winded answer, but I'm definitely passionate about finding one thing and stick with it. And here's the deal too. If you're not successful doing one thing, I can promise you, you won't be successful doing 10 things. So become successful doing one thing. And if you want to experiment, then by all means do that. But come back to that core methodology that you're following. All right, Glenn, do you have a trade of the week for us? If not, any closing thoughts you have on Academy.com?
I didn't get a chance to create a precise structure. I can tell you this, and it is specific to this week. It's on the Forex or currency side. There's a couple of ways you could play it. Suffice it to say, I'm bullish and expect appreciation in Aussie dollar. Right in here. That's the trade of the week. I do the Forex, but a trader on the security side, you could trade the futures contract or an option spread or an ETF that tracks Aussie prices. Structurally, you got nice wave structure. There are a number of reasons I'm looking at, but and fundamentally, there's an aligning or a converging of a number of different sources of things that I expect will serve to bid up Aussie prices for the next week or so. So as a kind of a swing to a short-term position trade, I expect appreciation in Aussie dollar. Any strategy that would exploit that, I like right now.
I've been long the Aussie for a while, so that's
well, we're in
good
concert.
news.
Hey Dave, one quick note, because I took it personally. I'm playing, kind of being facetious, but you said in your previous statement about don't give me market timing, but give me time. I wanted to just qualify that because you know that I do a lot of market timing.
Right.
I'm not suggesting or even implying necessarily I'm going to place a trade solely on the basis of time. When I reach, like, for example, like my time point in the stock market for May 3rd, next Wednesday, doesn't mean I'm going to place a trade simply in direct response immediately vis-a-vis a time point. I just look at the timing points as a complement to my price, because yeah, there's the pure technician in my brain says price discounts everything. So when I arrive at a time point that I projected, say for example, that's merely an incentive to further look more deeply. Do I have a corresponding price set of factors that augur for an adjustment or a trade selection? Because yeah, price does discount everything. I'm in complete agreement with you on that.
Well, yeah, I mean, obviously I'm timing the trades best I can, and I'll show a setup here that just triggered, and I'm going to go ahead and double use it as a trade of the week too. So obviously we're using timing in what we're doing, but I think Livermore's point was twofold. One, wait for your setup, so you're going to need time, and then he said the money's not made. He said the money is made in the sitting, and I think that a lot of people thought he meant sitting in positions for a long time, but he does have quotes that say that. His point there was that you want to wait until the market comes to you. So I think that statement is two things. One, let the market unfold once you're in, and like I said a minute ago, I often do what I call a dead money report, where I'll show a stock go sideways for months and then take off once again. And as long as you're in longer term trend following mode, and for us that means we're taking partial profits, we're trailing a stop higher, we're following the system and following the methodology and the money management, et cetera. As long as it's moving in our favor, or even if it's going sideways, as long as we're not stopped out, we're going to continue to follow along. So he talks about both being patient, waiting to get into trades, and then being patient once you're in. And I think that's the point.
Oh yeah, I concur. Yeah,
clearly. Kurt, let's go to you next. You have a trade of the week, and if not, anything you want to tell us about T3 Live?
Yeah, I've actually got two. The first one, I've got Aussie US dollar up, and by coincidence, I'm actually looking at this to move lower as opposed to higher.
What's the time frame? Are you looking at a daily chart?
Daily, yeah, this is the daily. Now that being said, so I'll preface it by looking lower, but at the same time, I'm going to go to the hourly first. And right now, the hourly's moving higher, so it's not something I'm doing right here now, this moment, because this hourly is going to need to break trend first. But as I look here at the daily, right, it came up to the top of this range, which I'll go to in a minute, show you more broadly the range. But it's been putting in the series of lower highs, equal lows right here around the 0.75 level. And so I'm looking at this, okay, moving up here, topping tails at resistance, so supply is increasing. And if it can break under this 0.750 level, that's the real line in the sand. So if it gets under that, at that point, we've got this open air below for it to really fall. And so looking at the weekly, this is kind of where I'm really, why I'm leaning lower, and here it is up at the top of the range. It had its chance right back here, March, to really get going through it. It failed, came back down, and now it's really having a hard time getting up above that area, taking out these recent weekly highs. So if it breaks, right, you can even kind of make the argument, maybe a little mini head and shoulders, just looking at really the start of this year up until now. So that's the one that I'm looking for to move lower, is Aussie US dollar. And if it breaks, then like I said, back down to the 0.72 level, to the bottom of the range. And that's really what I'm looking at ultimately, is just a range play on the weekly. Top of the range down to the bottom, and then that's it. I'm not saying it's going any lower than that. So that's one. And then the other one is BABA, right? I brought this one up last time I was on as a long. It's continued to move higher, and we do have 120 as the all-time high. I think it can just continue to go through that. I think this is going to be a standout name into the end of this year. So this is not the ideal time to be getting in necessarily, but if you are playing it for just a long-term hold, at the end of the day, your entry doesn't have to be exact, and even if it pulls in, you could average into it a little bit there. But I do like BABA as a longer-term play as well.
Okay, cool. Yeah, I was just trying to get it plotted. One thing that I believe in when it comes to IPOs, and this is what I would call a toddler because it's been around for a while, is it's the old Will Rogers thing. If they don't go up, don't buy them. And believe it or not, in a lot of cases, if you just bought IPOs when they made new highs, there's a few caveats to that, but which would take a little bit longer than we have left in the show. That if you walk away with anything today, number one, trend, of course, as we all kind of hammered, but pay attention to any issue that's relatively new or even a couple of years old, like this one is. When it makes new highs, I think it pays to pay attention in an IPO, because after that, it's clear air and everybody's happy. And anybody sold it might even have some regrets and want to get back in. So fully agree with you on that. Certainly in a nice trend and worth watching there too. Let's see. Did we get everybody? Christian, you. Anything you want to tell us about T3 Live?
Well, first of all, thanks for having me here again. Always, appreciate the time to come on here, what everybody's got to say. But as far as checking us out, just go to T3Live.com. You can see what we've got going on, or just call in, talk to one of our trading counselors. They can direct you, but we've got trading rooms for every style, really. So definitely reach out to them, and they can put you in the best place possible to, help you out.
Cool. All right, let's see, Christian. Let's go to you next. We, I don't know. Let's. Do you have a trade of the week for us?
Yeah, sure. 2 hours ago, you should have went long Whole Foods. Sorry, I couldn't.
Whenever we lose sound or something, when I come back on, I always say, and that concludes the secret of trading.
And I give that 100% confidence.
Yeah.
Sorry, that was too easy. That was a layup. So what I've been noticing for the last couple of months is just a lot of the international areas of the market have been really turning. They're, of course, with what's happening in Europe today, but that's been ongoing for a while. And I touched upon ETF fund flows, when I was on earlier, and really that's where the money has been going in the beginning of the year. A lot of it has been going into Europe, and a lot of it has been going into emerging markets. So it does look like there's something that's been going on here. These things have been basing, for the last year. So I still like those very much. I like emerging markets. I like EEM, but I'm always looking for when different countries are starting to make short-term highs. And are starting to break out. So one of the things that I looked at just last week, and we saw a little bit of option activity as well in the TUR ETF. Forget about the political headlines for a minute. Just watching price. And this is a 10-year trend line, and you could see that it's the Turkey ETF has hit the trend line a couple times here and failed. One of the things that's a little bit different this time is we're now breaking above on a long-term chart above this downward trend line. And then if you kind of go in a little bit closer, which I think I have here, which it is up nicely today. But this was an idea that we put in our weekend newsletter. And if you look at the one-year chart, you could see some positive things going on here. You could see a nice golden cross, the 50-day crossing above the 200-day moving average. So I like along here staying above. You could set your stop. Your stop is going to be a little bit further down because of today's move, but let this thing go and see where it wants to go to, and have a stop probably around that 50-day moving average, or if you want to use something a little bit shorter, maybe the 20-day moving average, and then just let this trend go, because it seems like it's been in a downtrend for a long time and it's breaking above. A couple other areas that are doing this is Malaysia is doing this as well. If you look at EWM, which we saw a little bit of call buying in this one as well. So this is starting to poke its head above, the 200-day moving average, and you see the 50-day crossing above the 200. That's a nice buy signal on something that's been depressed for a while. So, it just kind of goes back to the beginning questions about why you think this market is going to go higher. It's not just about the U.S. Really, the rest of the world has been in catch-up mode since the beginning of the year. I mean, you can look at India ETFs or the India market, and you could see they're well up over 20% year to date. So they're kicking the U.S.'s butt, and I think there's a lot of opportunities. You just have to kind of pick up on I know we've hammered the point of trend, but some of these things are starting to get out of a big, long sideways base and break out. In the U.S., I know it's just one idea, but that we're supposed to talk about, but just for U.S. strictly, if you want to play the U.S., really what the trend is semis. Every time semis have broken down a little bit and have had high volume, in the case where volatility seems to show up, we just had a break of the 50-day in SMH, and it's reclaimed it, and it looks like the trend is intact. So sticking with this and kind of drilling down to some individual semi names are still showing a little bit of strength after about a week or 2 weeks of volatility. So those are my three ideas.
I'm a big fan of watching the semis, and they had me a little nervous here for a while, but I agree with you. It looks like they're back, baby.
Yeah, absolutely.
As far as trade of the week, and then we'll give everybody else one more chance to circle back if there's anything else you want to wrap up with. As far as trade of the week, we actually just went long Fuel, F-U-E-L, literally a few minutes ago. And our entry was right around 5 or right at 5. I forget exactly. I'm pretty sure it's 5. And you might be thinking, well, it looks like it's already made a pretty big move in here. Well, if you back the chart way out, it's kind of like some of the things Christian was talking about, like when it comes to Turkey or whatever. This thing could just be getting started. This is what I call a potential Phoenix stock, where it just comes down and begins to rise from the ashes. And there's a lot of things that happens when a stock bottoms out for years and years and years like this. Some people probably die and their kids sell the stock out the estates. A company gets its act together, or whatever the case may be. But I think the stock has a lot of potential, and I don't see much resistance to maybe $10, and then after that, $15 or $20 a share. So that's a long ways to go, and before it runs into a lot of problems. So I'm bullish on this one. I always use a stop. I don't have the stop in front of me, but it's probably a lot of room on this one, maybe even as much as a 1.5 or so, because look at the HV. This is a historical volatility. Has an HV of 70, which is very significant. Just for fun, let's take a look at the S&P right now. S&P has an HV of 7. Okay, so it's about 10 times more volatile than the S&P. Just on that measurement, it's a little bit more complex than that. But if you're using that as a measurement of beta, it's very volatile. So consider yourself warned. But I think this one has a long ways to go. I'm going to go ahead and wrap it up for me, just because we're running low on time here. DaveLandry.com. If you go to DaveLandry.com / and I need to get a smaller URL for this, but it's timing-research-special-offers. I have a $100 gift certificate for you there. If you just click on the, you can just email me. And with that, you can get all 3 of my books for free and get an idea what's going on. Also, at the top of the page, there's some free reports. So feel free to download those. And then if you scroll down, lots and lots of free content. And then we also do a weekly webinar every Thursday, and I'll lecture on the market for a little while. And then we take a look, lecture on trading or trading systems or whatever the case may be, patterns, trend, a lot of trading psychology talk in that thing, in that webinar too. And then we'll pop out to the overall markets and we'll look for opportunities and see what's going on. And then obviously bring your stock picks or any questions that you might have, and we'll have a look at your stocks as they relate to. All right, Glenn, we're pretty much out of time, but let's go ahead and just make sure everybody gets their last thoughts. And any closing thoughts about Pacific Trading Academy, from you to say.com?
Sure. Once again, Dave, thanks again for having me. It's always a pleasure to have a discourse and learn about, kind of a cross-pollination of all these ideas. And I like this stock also, Fuel. I think that's a great pick. Yeah, once again, a quick recap. I just teach all manner of basic technical analysis. I primarily focus on the E-mini and Forex, and recently we've just started a more interest in the Forex sector. So I'll be writing a daily kind of overview of Forex markets, the major pairs, as well as some of the important crosses. But I, along with some of my coworkers, do all manner of technical analysis, beginner, intermediate, expert, whatever. You can find out more about our programs in terms of what I offer and my coworkers offer at pacifictradingacademy.com. Thanks again.
Kurt, any closing thoughts on T3Live.com?
Yeah, I mean, like I said, you can check us out on the site or even on our blog, where we post a bunch of different content from the various contributors we have here. That's just t3live.com/blog. And other than that, just want to thank you guys again for having me. Always a pleasure, and look forward to being back again with you soon.
Yeah, glad to have you, Kurt. Enjoyed it too. Thank you so much. Christian, any closing thoughts about TribecaTradeGroup.com?
Yeah, sure. And also love the pick as well. So I get you win the trading contest for the day. I like the Fuel as well. That's a great find.
Well, thank you. So, that's one of the complaints about the show. Not enough controversy. So we'll try to mix it up at some point. But I appreciate that.
Cool. So yeah, you can visit us at TribecaTradeGroup.com. You could take a look at all the services that we provide are right on our products page. But would love to see you guys check it out. TribecaTradeGroup.com. You could use our coupon code TTG. You get half off the first month. And our room is really about kind of just what we're doing and what we're talking about today. Just that we're expressing a lot of different trade ideas. It's a collaborative trade idea environment where we're all trying to make money together. So check us out, TribecaTradeGroup.com. And thanks again for having me. Really a lot of fun doing it.
Cool. All right, I think I've pontificated enough. So let me turn it back over to David Kosmider, our creator. All right, David, you want to go ahead and wrap things up?
Thanks, guys. Yeah, great show. Just want to remind everyone watching, you can be sure to hit the subscribe button on YouTube to make sure to get updates on future shows. Also, you can go to TimingResearch.com to download any of the past reports or watch any of the past shows. Join us next week. That's May 1st. Neil Batho, Rick Sadler, and Rob Hanna will be joining us. And just want to thank my guests again for this week. Glenn Thompson of PacificTradingAcademy.com, Kurt Capra of T3Live.com, Christian Fromhertz of TribecaTradeGroup.com, and Dave Landry of DaveLandry.com. Thanks, everyone.
Thank you. Thank you, guys.
Thank you.